Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I am your host, Whitney Sewell. Today, our guest is Gino Barbaro. Thanks for being on the show, Gino.
Hey, Whitney. How you doing?
Really good. Hope you're doing well, Gino.
I am.
So, I've met Gino at conferences in 2017, 2018, Jake and Gino conference, which I highly recommend. First year, 2017, I was very impressed. It was very well done. Great speakers, great content. And then this year, it was twice as big. Thanks again, Gino, for the conference and how you're educating so many people.
Thank you. I mean, we on our first conference, I remember we shared a private moment before the whole thing started. And it was really a nice moment between the two of us because you were one of the first guys who snuck in, and we had the doors closed. And I was just sitting there, I'm all nervous, don't know what to expect, and it was really good. It was a really nice moment, and we had a great time. It was a great first event, and I think if you just try to bring value to people and try to teach multifamily, I think people like that. And if you just continue to grow and continue to make mistakes and continue to fall forward, good things happen.
Yeah, no doubt. And Gino's definitely one of my favorite people in the business, just very genuine, ready to help anyone. I really appreciate that about him. He's an investor, a business owner, entrepreneur. He's grown his multifamily portfolio to over 900 units in just a few years. He's a best-selling author. He's a certified professional coach. And Gino, why don't you give us a little more background about how you got into real estate and, and kind of the direction your business is going in now?
Sure, Whitney. I think the most important thing that you missed out was I'm a father of 6 children. We homeschool our kids, so that comes first. That's what I learned in life coaching school. You figure out what your why is, and I think we can all say, hey, my family's my why, but let's chunk it down a little bit deeper. My real why was I wanted to be an inspiration and a role model for my kids. I wanted to know what a father was. I wanted to know what a male was. I want them to understand how we're supposed to treat women, how we're supposed to, put them on a pedestal and let them know that we're there for them. So how would I do that? I do that by my actions and by trying to provide for them. And I have a son also, so I want my son to see how we're supposed to do that in life. And I'm not talking about, saying women have one job and men have another job, but I wanted my women to see how I treat them, how I love them, how I respect them, how I teach them. And I was at the restaurant for about 20 years. I had a restaurant business, and I just didn't feel like I was doing that. It was a job to me. I loved it. It was family oriented. That was some great things about it. But on the flip side of it is I had to work on the weekends. I had to work during the holidays, during Christmas, on Easter, all these big holidays I was working. And it was tearing me apart because I wanted to spend those holidays with them. But at the same time, I had to work. So that's what led me to multifamily. About 5 or 6 years ago, February of 2013, we bought our first 25-unit deal. It took us about 18 months for Jake and I to buy that deal. You're not going to jump in and buy your first deal within the first month or two. It's not going to happen. I always tell people it takes 4 years to get a college degree. It's going to take a little bit of time. And Whitney can document his journey from 2017 to 2018. It's a year of learning, a year of networking, a year of growing, a year of really fleshing out your why. And I didn't finish about my why. I think the other part of the why was I just wanted to spend more time. I wanted to become financially free. I wanted to be able to jump on a podcast at 10 o'clock in the morning and not have to, as Whitney says, go to my day job. Because my day job was actually a day and a night job and a weekend job. So I really had a crystal clear idea of what I wanted to do. So that's what led me to multifamily.
Awesome. So I mean, you and Jake have grown this business now, and you've been buying properties without syndicating, but now you all are moving into the syndication platform also, right?
Mm-hmm. Yes. Syndication is another tool in the toolbox. I think a lot of guys who get into multifamily who don't have the funds, but have the ability, have the experience, they get into syndication first. Jake and I did it backwards. We bought our first deal by ourselves. We were able to add value to the property. We were able to buy our second deal. And it's important. We brought on another partner on our second deal who was really helpful with the balance sheet. He lent us money on our third deal. We were able to refinance these properties and roll the proceeds into the following properties. So for me, it wasn't the shiny object syndrome. I didn't want the car, didn't need a bigger house. I just wanted to continue adding to my passive income so I could leave my day job. So that's what we ended up doing. We ended up scaling to 900 units with no syndication. Now we've got a syndication closing in November 6th, it's closing 130 units. It's our first syndication, and it's like we're buying a first deal again because it's a lot of stuff to learn. So I was fortunate to host a podcast where I learned syndication on my own podcast, actually podcasting probably about 20 different guys who have different strategies on podcasting. I love syndication for a couple of reasons, and I don't like it for a couple of reasons. So there's pros and cons to every strategy. It allows you to scale. It allows you to use other people's money. It allows you to really focus on the underwriting aspect of it. You need to be diligent because you're getting money from investors. The flip side is I don't like taking money from people, because especially family members, because it puts a little pressure. And sometimes, something doesn't work out right. I don't want to lose that friendship or that family member. So that is probably one of the reasons why we didn't start in the beginning. And the second reason I think is it's more of a short-term kind of strategy where it's, I don't want to call it a glorified fix and flip, but it's one of those where after 3 to 5 years, you need to somehow return the capital to investors, whether it's, usually through a sale. If not, you probably have to refinance the property if you're fortunate. So we like to buy and hold for long-term. And then if property appreciates a lot, let's sell. But if not, we like to hold. So that's one of the big differences that I struggle with syndication. Although we're doing the syndication, it looks like it's got a lot of meat on the bone. Hopefully after a couple of years, we can refinance and continue to hold it.
Awesome. So why don't you tell us a little bit about the deal? Where's it at, and what was it about it that made this deal stick out, that said, okay, this one's going to work? That's
a great question. I mean, it's in Kentucky. It's in Louisville. We're a vertically integrated company. So we do day-to-day property management. We have the education company. We created a syndication company. We're actually going to start a brokerage company also. So we said to ourselves, we want to have it within 3 hours of Knoxville, where we are. That's Louisville. So we love that. We love that market because there's over $12 billion of economic activity going on. It's got great job growth. It's got great manufacturing there. We're a couple miles down the street from 6,500 jobs. We like that. Great tax structure there. The property is a mom and pop, which is what we focus on. I'm just thinking through the property right now. It's the exact same property that we bought on our third deal. The rents are really suppressed. They're only $520 for a 2-bedroom, and we know we can get $700 from day one. There's a RUBS play, so ratio utility billing play, where we can bill back to the tenants. And you might be saying to yourself, why would a landlord do that? Why would he just keep the rent suppressed? That's the mom and pop mentality. They don't want to bother with it. They're so burned out. They have no systems. They think if they raise rents, they're going to lose tenants. But one of the things with what's been going on, macroeconomically, people are not buying. They're renting right now. So rents have been pushing up for the last 5 or 6 years. And I don't see that stopping. I don't know why. They just keep coming out with articles on home ownership is dropping. And our rents in Knoxville have been going up 5% for the last 3 years. And they're still cheaper than actually owning a home. So there's still the ability to raise those rents. So for us, those are all the value plays on that deal. There's a commercial unit on the property where I think we can actually add value to it, and we're pulling out some land from the deal. So hopefully we can sell the land off as a different piece, different parcel.
Awesome. So what's been the most difficult thing from going from, not syndicating to syndicating? Because obviously you all are very experienced in purchasing apartment buildings, but what about the syndication has been the most difficult?
For us, it was the timeline. It's just actually understanding the whole mechanics of it. So I have a little document on our platform. I'm creating syndication videos. It removes really fast. You have to have all of your ducks in a row. You need to be able to speak to a syndication attorney months before you even start the journey, figure out what your strategy is, figure out if you're going to give a preferred rate of return, figure out what the split is, the general partnership and the limited partner. Get all that done and then start, if you're going to start syndicating today, you need to start creating substantive relationships with others and other investors out there. And I was blessed through the education platform, through the live events, that we had a significant sizable investor base. We weren't using it because I just didn't have time to utilize it. That's why we created the syndication company and brought on a young guy named Dylan, who's head of investor relations. It's another job, syndication. You're dealing with investors now. It has nothing to do with underwriting the deal, finding the deal, running the deal. It's investor relations. And the way investors are going to actually invest with you is you need to reach out to them. You need to create value to them. You need to be transparent with them. You need to spend hours on the phone with people. So, Dylan, when he first got here with us, he spent hours, reaching out to the 300 or 400 people on our list. And it's since grown to 600. So you need to, nurture those relationships. So you need to start creating that. So when you actually have a product or an investment out there, you can actually reach out to them and say, hey, by the way, this is what I've got. Would you like to see it? So that was one of the hardest things for us to do, is instead of just, hey, listen, we got a deal, let's go put our money. It's, wow, we have to think about how are we going to structure this for our investors.
Nice. So y'all are moving into the syndication platform also. You all keep growing the multifamily side also, that's, buying the mom and pop properties just like you've been doing, and then also doing syndications. That's like another arm of your business.
We've got another 115 units in Knoxville that we're putting under contract this week. It's a small deal. It's about $2.8 million. So that one we're going to keep in-house ourselves, because we're able to get community financing on it, 15% down with the renovation costs built into the loan. So that's a great deal for us. You're going to have to get recourse debt on that. So not many syndications have recourse financing. So on this one, we're just going to get recourse financing. When we build it up, we'll actually be able to refinance it out, pull the money out, and bring it to one of the agencies. So about a 12-month strategy. So that's something we're going to probably buy in-house. But I think syndication, one of the big pluses for syndication is it allows you to go big. So we can start focusing on those $15 and $20 million acquisitions. Whereas if we're doing it by ourselves, we've done a few of those by ourselves, but you tend to run out of money after a while. So syndication allows you to scale, allows you to go bigger, and allows you to have a better, selection of deals. So that's why we like the syndication also.
You think you can be a little stronger too, as far as putting in LOIs? I mean, you're ready to go.
Mm-hmm. Yes, absolutely. That's a great point. And I think we were talking about beliefs before. I think it gives you the confidence, right? Knowing that you have a couple investors with $1 million or $2 million on the sideline saying, I want a deal. When you find that deal, you're confident to put in that LOI. You're confident to call the broker up because you have those funds. So that's something that cannot be overlooked. That's a great point.
Awesome. So why don't we talk about that a little bit? I know that's something you are very educated in, as far as helping and coaching people get into the business. What's a very common thing that keeps people from starting and getting into the business, Gino?
I think we talked about it offline a little bit. I think it's a person's belief. I mean, you look at two people. If somebody believes that they can do something, they're going to do it. And if they believe they can't, it's a self-fulfilling prophecy. They stumble, they can't do it. I think we talked about the why. I had a strong enough why. I had a strong enough vision of why I wanted to get into multifamily. But I also got educated. And I knew it took, like you, Whitney, about a year to become really educated in the verbiage, being able to speak to brokers. I did 2 different real estate coaching programs. So I spent a lot of time on my money. Bigger Pockets wasn't around as much 10 years ago. I went to life coaching school. I worked on myself. But I think if somebody believes they can do it, and the first, couple, myths that we get about multifamily is, I don't have enough money. There's no money out there. Well, there's so much money out there. You don't have to use your own money, but there's so much money out there. I think people have to get educated on the deals and how to underwrite deals. And the second one is no deals out there. We're finding them. It's not as easy as it was a couple of years ago, but you have to be out there working. And I think the other thing is, I think people think, they're just deals are going to fall in your lap. Or I look at a couple of deals. This deal that I'm talking about in Knoxville, we had it in April. We went to go see it. It was out there for a couple of months. Then the gentleman said he was going to sell it to his partners. It came back to us. So it's one of those things where you have to be patient, persistent, but willing to walk away. And that's what we did. And I give my partner a lot of credit, because I was really annoyed when he turned us away. And, he'd strung us along for so long. I think just being patient and, it doesn't work, just walk away. Don't burn any bridges. It might come back to you. So those are the big myths in multifamily. I think everyone's comfortable with single family because they've done it. They've bought a house. It seems like something that they can do. I think the belief is that that's easy and they can do it. Just step back, check your beliefs. Like I said, if a pizza guy and a drug rep can do it, anybody can do it.
So you mentioned, people saying, I can't find deals. And I do. I hear that all the time. And then, then I interview guys like yourself that say, we're doing this deal. Give us some pointers, on how to find those deals. What are you all doing to increase your deal flow?
That's a great question. Starting a podcast like you is a great way to find deals, because you talk to guys who are in the business. You start networking. Going to live events is a great place to find deals, because you meet people who are in the business. Going to meetups, or maybe starting your own meetup, is another great place to find deals. Thinking outside the box is one of the ways of finding deals. The broker relationships are key in our industry. And, brokers aren't going to give you deals on day 1 or day 2. You need to be persistent. I've got students who started the platform a couple of months ago. There's one in particular. He reaches out to brokers every 3 or 4 days. He has them on speed dial. He has them on text. He has them on email. You have to build a rapport with the person on the other side, and then they might start sending you deals. You have to have the credibility, and if you don't, leverage someone else's credibility if you haven't gotten into a deal. But it's all about really reaching out to these brokers and trying to make connections with them.
Awesome. Gino, what's the number one thing that's contributed to your success?
I'm not that smart, so I really have to work hard, and that's the truth. I mean, people who are really talented sometimes are a little lazy. The thing with the restaurant business, it was hard work. I mean, to make money at the end of the week, you had to pray that it didn't snow, that you didn't lose power, that 6 days you were open, that a holiday didn't fall on one of those days, that you worked 12 hours, that it was 100 degrees or 20 degrees. It was just really hard work, and it was very fragmented. So I was able to schedule out my week. So I've got my sheet here in front of me. I've got my things to do today. I'm very regimented. I know what I have to get done. And I think the other thing is the accountability with the partners. So Jake and I created a partnership, and there'd be no way that I would be able to do the education if he wasn't running day-to-day property management. It's just very, very difficult to do both because it takes full time. I did Jake and Gino for over a year and a half, maybe 2 years without monetizing it. Just doing podcasts, writing articles, getting on people's shows. And because it was fun, because I could do it, because I didn't need to get paid from that aspect. I was getting paid from the investments and all, but it was a business it was creating. And that's the weird thing about life. If you don't give up, things start moving, you start getting momentum. Then all of a sudden, one little thing happens. You do a live event for 200 people. Then the next year it's 400 people. And then the next year it's 700 people. It just grows exponentially. And you just have to stick into it and just make sure that, it's a passion if you like it. And I think the other thing is, as you grow, it's not about the money. Money is not the cause. Money's not the cause. Money's not the cause. It's the result. So if you're just doing this for money, it's not going to work. Ultimately, you're going to burn out, and you're going to see that that's not how you create value. You create value by seeing what the marketplace wants and what the marketplace needs. And we're trying to grow a vibrant community. And in real estate, it's all about the community. It's all about being held accountable by other people and being able to ask questions and be able to network. So I think that's probably the biggest thing for me.
Awesome. So, I see, you all are growing so many arms of your business, and you all are doing some great things. I've kind of seen it happen over the last couple of years. And, as far as the syndication aspect specifically, how are you all growing that? What are you doing? Maybe something that we could all implement.
So we didn't start out by doing this, right? We just wanted to get some passive income and buy some deals. And that's what I think is the difference between multifamily and single family. I think it's easier to grow a business. And I think everybody on this call needs to understand that real estate is not real estate. Real estate is a business. You need to treat it as a business. And it's easy to. It's income and expenses. I think what you have to do is get clear on what you want. Right. Start growing your assets, and every little property is its own income generator, whether there's laundry on the property, whether there's rubs on the property, application fees, maybe cell phone tower, parking. Each one has its own revenue generators. That's what I love about multifamily. Now, for the syndication, we're fortunate to start the education right after the property management. So the education was able to help us with investors. You don't need an education platform. You can just start doing writing articles. You can start reaching out to people. To start a syndication company, start with getting investors. Start putting investors on your page. Start creating a credibility book where you're showing people what you're doing. If you have no deals, get a case study. Create a case study, put it inside what I call a credibility book, show them to people and say, hey, listen, this is a deal that I'm looking at. If I find something like this, can I reach out to you? And most people are going to say yes, because they want to, the opportunity. A lot of people want to get into multifamily, but don't know how to. So this is a great way for them to know how to. So for us with the syndication company, we're able to have all 3 or 4 branches under one office. So we're opening an office in Knoxville the next month. That's going to have our syndication team there, our education team, our brokerage team, and we're actually bringing in a mortgage broker also. So all 4 of those aspects under one roof where they're going to feed each other. So if you don't like the education part, I can send you to become an investor with us. Oh, you need a mortgage? Here's a mortgage deal. Oh, we've got a deal in-house. If we can't buy it ourselves, we'll source it out from our brokerage team to our community. So it's in the initial steps, but we see that it's a really great way to become part of that whole vibrant community and be able to offer those services to our Jake and Gino community.
Well, that's exciting. I can't wait to see that happen. And
Mhm.
Gino, tell us the number one reason you see syndicators fail in the business.
Um, that's a really good question. I don't know that many that have failed now because it's just the market has been elevating, but I think they have unrealistic when they do underwriting. I've talked to the attorneys, and a lot of attorneys saying that a lot of these deals are skinny. And I think syndicators, just like everybody else, get into the game because of the fees and because of making money, not because of focusing on their investors. I think the number one thing that syndicators that we have to do is look at the deal, not by what the fees are going to be generated, but what the returns are going to be for the investors and how we're going to get their money back. So just like any other business, just like real estate, if you focus on your investors and how your model is going to get that money back to them and how you're going to make them money, that'll be okay. Don't get into it because you're going to get a 3% acquisition fee and a 2% property management fee on it. That's the icing on the cake. The real idea is just to focus on the deal itself.
Nice.
Does that make sense?
Yes. Tell us, I guess, what are you all excited about right now as far as, you're finding more deals, you all are, growing your business. And as far as in the syndication side, what's going to happen, say, over the next 6 months? You're going to keep moving from this deal how's that going to grow?
We're going to continue to look for deals. We just had we have our Monday morning call every week. And we actually put out a thing that we want to underwrite 3 deals a week. So 3 deals a week is not a lot. It's not a little, but when I say underwrite, I mean real deals, not just looking at OMs and going, okay, I'm going to underwrite this. We want to seriously consider 3 deals a week and putting in 1 offer a week. And that's pretty aggressive for us because when we put in offers, they're normally real deals. So we haven't really put in that many offers because there hasn't been that many offers to put. So that's what we're doing over the next 6 months. We want to put in an offer a week. If we do that, we'll get a deal a month. I know we will because that's just how it works for us because we're only going to look at serious deals, only off-market deals. So we're looking to hire more brokers. So once we bring the brokers in house, their idea is they want to invest in multifamily, but they can't because they're real estate brokers. We can give them that opportunity, and if they have any deals, we can buy the deals from them. So that's another way that we're looking at deals. We just want to be aggressive. We want to stay aggressive. We want to keep our investors engaged because if we have all those investors and we're not putting their money to work, they're going to walk away or they're going to feel disengaged. And I think the other thing is with the education piece on this first deal, all the investors, they're going to be getting our webinars. We're going to be doing monthly webinars, teaching them how to do the process, how you going through syndication, how you add value to the property. So that's going to be part of the value add to our investors and to our, all the people who are on the Jake and Gino platform.
So you mentioned underwriting three deals a week that are already pretty good deals, or you feel like they could possibly be. How have you narrowed it down to just those 3 before you look at them?
That's a good question. I mean, Dylan is really aggressive. We've got deals coming from our students. We've got deals coming from brokers, and we've actually broadened our reach. So within 3 hours, so there's other markets, Lexington, Louisville, Atlanta, Chattanooga, other parts of Tennessee. We're there within 3 hours of Knoxville. So the reach is a lot bigger now. So we've got a lot more to look at. And it's just deals that, hit our parameters, whether it's an 8 or a 10% cash on cash return, between 6 and 7 cap rates, looking at that kind of stuff. Looking at deals 100 units plus, depending on where you are. If we're going into a new market like Louisville, we'd like to have over 100 units so we can hire property management and we can hire maintenance guys full time. But if it's in our deal and our market, it's a 50-unit deal next to another one of our properties, we'll look at that also. Just anything that makes sense, anything that falls into the mom and pop realm, anything that has a motivated seller, that's what we're focusing on.
Nice. Well, Gino, tell the listeners how they can learn more about you and what you all have going on as far as another conference or what's happening with Jake and Gino.
I wish we had another conference coming up soon. We just came off our conference now. Next October, next year, we're going to have a conference, hopefully in Orlando and Florida. Real easy. It's just jakeandgino.com. Go on our website. We've got tons of articles, resources. Our podcast is called Wheelbarrow Profits because of the 3-legged framework: buy right, manage right, and finance right. So we're on iTunes, Wheelbarrow Profits, YouTube channel. We're out there.
Awesome. You've been a great guest, Gino. I really appreciate you being on the show. I appreciate the listeners listening today. I hope you'll subscribe and leave a rating and join us on the Facebook group where you can connect with the guests and we can all learn from them about the syndication business. And thanks again, Gino.
Whitney, thanks for having me on, and I hope you guys all have a great day.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.